Hi there, welcome to the Ecofinar financial channel. My name is Philip, and as usual, we'll be discussing something on finance, investment, and the economy. Remember to click the subscribe button and share these videos with others so that they can also benefit from it. Today, I will be looking at 5 practical ways to beat inflation. Uh, how this is going to work is first, we're going to talk about what inflation is, and then we'll look at what the rate is, inflation rate is in some select countries all over the world, and then we'll now look at the 5 practical ways to beat it. Right now, I think this is probably the easiest time to talk about inflation because almost everyone across the world can feel the impact. As a definition, inflation refers to the persistent rise in the prices of goods and services, which means that even if you're on the same level of income, you might not be able to afford the same things you used to because the prices have gone up. So this definitely is a challenge to most businesses and most households, and has left many really on the brink. So first, the current inflation started because many nations were trying to combat the coronavirus pandemic. So many injected stimulus and used several other methods to start to try and stimulate the economy. That was the genesis. Then, as they were trying to come out of that, the Russia-Ukraine crisis came forth, which made it very difficult to now control prices because energy prices, food prices, and several other things now started to follow what was happening before. So prices are high all over the world, and no country is actually an exception. If we look at some select countries, Nigeria's inflation rate was at 15.92% in March. If you look at the United States, is at 8.5%, the highest in almost 40 years. In the UK, it's around 7%. Germany is around 7.3%. Canada is around 6.7%. Even in these countries, is the highest in several decades. So the inflation challenge is a real one and is threatening many people all over the world, which is the reason why we are going to be discussing the 5 important ways to beat it. The first step we're going to talk about: reevaluate your spending habits. Reevaluate your spending habits. This cannot be emphasized enough. Whatever it is that you do not consider as a necessity, it will not ought to suspend spending on such things now, because the inflation challenge should not, most likely, especially if you are in a developed country, not continue forever. Countries are working really hard to battle it, trying to curtail it. So it won't ought to temporarily suspend spending on some certain things, just for the economy to recover and for you to be able to better predict prices. So reevaluate your spending habits. What is a need? What is a want? What must you spend on? And try and check it, and find a balance, so that it won't really hurt your the things you need to buy. The second thing we talk about is that you should seek substitutes. Now, it is very difficult for you not to find a substitute for anything at all, no matter what it is, no matter how important. There's very likely going to be a substitute for it. This is the time to search for those substitutes and see if those alternatives can effectively meet the need you have, but at a cheaper rate, at a cheaper cost. So if you've always bought a brand of anything, you might want to seek what other brands are charging and see if they can do the same thing without compromising quality, and then at a cheaper rate. So that's the second thing we talk about. The third thing is that invest in stable companies, not cyclical ones. So this is definitely not the time to be trying out different companies for which you are not sure if their line of business is a stable one. So there are companies we call consumer staples, and there are companies we call consumer discretionary. Consumer staples deal with companies who are in fast moving consumer goods, those goods that you cannot do without, essential household items and food and all those kind of things that you just have to buy regardless of how the economy is. those who qualify as the consumer staple companies. So if you're looking at buying a stock at this time, you might want to consider this kind of companies. That's because when the economy is at this kind of state, companies that are in the consumer discretionary, those things that you can decide not to buy, it's not going to affect you. They tend to suffer more than the companies in the consumer staple industries. And so you might want to reevaluate what you're investing in, make sure it is a stable company and not a cyclical one which depends on how the market is. The fourth thing we'll talk about is that make sure if you have to borrow at a fixed rate, not a floating rate. And this is very important. Right now, interest rates are rising. So if you borrow at a floating rate, that means that you also be paying back at a higher rate in future. But if you enter into a deal to pay a fixed rate going into the future, no matter what happens, the lender will not be able to force you to pay more because you already agreed a rate. So right now, make sure if you have a need to borrow at a fixed rate and not a floating rate. Because even at this time, central banks will typically raise interest rates and the cost of borrowing will rise. So if you borrow at the fixed rate, that's fine for you. And that should be the best option now. The last, which is also the fifth we share here, is that you should invest in inflation-friendly assets. Now, there are assets which over the years have had a positive correlation with inflation, which means that when inflation rises, they rise as well. And those kind of things are, one of them is real estate. Uh, that definitely rises. Rents will rise. Housing prices will rise. So they rise with inflation, and also commodities, different types of commodities, they will also rise with inflation. So those are the things that you should consider investing in. And if you are a very sophisticated investor, of course, you can consider inflation-linked bonds. That's because, of course, as the name implies, the bonds are linked to inflation. So as it rises, the what you get also uh, moves with it in terms of what you invest in. So those are the 5 steps we share. It is not in any way exhaustive, and we're not making it seem so. We just feel that it could be of help to anyone. So you can share this video for those who are still looking at how they can beat the current situation in the world market, where inflation really is threatening their income, and let them also be able to benefit from what we share here. You can also share other ways in the comment section. We'll be glad to see that. And this is where we'll end this edition. We'll be back with you next time. Make sure you subscribe to the channel. See you next time.